Well, good afternoon, everyone. My name is Bruce, your friend in financial markets, and today we're going to be looking and revealing at what our put options did over the night. If you don't know what I'm talking about, yesterday I posted a video on how we were buying put options on select stocks that had X dividend dates today. So we're going to be looking at these stocks, what we did right, what we did wrong, and just see generally how they performed and how we can perfect and improve our system for the next go around. We bought put options on two companies, WBS and ATVI. I don't know what WBS is, to be honest, but I know ATVI is Activision Blizzard. Activision Blizzard did not work out at all for us, but WBS did. So we're here on Webull, and I sold the Activision Blizzard upon waking. Right now it's 9:37 a.m. So I saw the Activision Blizzard ones were a dud. Look at this here. So yesterday at around market close, we purchased at around, the stock price was around 91.60 that we purchased these put options, and it went the absolute opposite way. So we would want it to go down, but it went up, right? And let's just take our drawing tool here and see approximately how much it went up, right? Went up nearly 0.5%. So our Activision Blizzard puts did not work out at all. And we captured a loss, realized a loss of $960. However, I want to turn our eyes to WBS, and we're looking at the stock now, Webster Financials, and look, exact opposite scenario. This is the scenario that we were betting on happening. So we bought around here at, 96, 98, about 97. And from that point, we're down 2.4%. We can see that, and our calls our puts have printed a little bit of profit. All in all, it looks like we're up about, almost $400. So I want to note one thing that I really, is really a big concern to me when I was purchasing these. So remember yesterday's video, we were even going down our spreadsheet, and we were going down the list and trying to find stocks that even had viable options chains on them, because a lot of the options looked like this. There's literally no graph. There's no liquidity whatsoever. Let me look at the order book. Pop up the order book. We have no volume. I mean, the top size is 33 on the bid. And the spread is immense. 410 bid, 470 ask. Look at that. That is just absolutely insane. Now, let's look at, I know we're just going to look at a stock to compare, but let's look at Intel stock. Let's look at the order book on Intel stock. Look at this. The bid and the ask are 1 cent off. 35.80, 35.81, okay? And we actually see that movement. We see the order book changing, every second. But with the WBS stocks, we really messed up. Oh, and look at this. They've definitely gone down a lot in value since we've been talking. So now I'm down on the day. Well, they're down, so we're just not going to sell them right now. We're going to hope that they go back up. And now I want to take us to our spreadsheet for our second part of the video, which is we're going to be selecting the stocks that we purchase tomorrow. As we can see, look, Activision did not work out. WBS did work out. I plugged in this data from NASDAQ dividends that all have X dates, let's look here, of 8/2, August 2, tomorrow. So we've got a few stocks here. Okay, so let's check out Northwest Bancshares, NWBI. They pay a dividend 6.47. So on a quarterly basis, that's going to be 1.64. So let's look at NWBI, Northwest Bancshares. Let's check the stock. Doesn't seem to be a lot of liquidity. How about we check the options chain on the stock? Well, they don't seem viable, actually. I mean, we've got many options with a bid of 0. So there's not a lot of stuff that we can work with on this. So that stock isn't going to work for us either. We're looking for stocks that have high liquidity in their options that are actually viable plays, because if there's no liquidity, we just, we're dead from the start. We can't even do it. We're going to look at HESM, pays a yearly dividend of 7.5%. HESM All right, options chain I can see has some movement. So the volume of shares exchanged on the stock, 432,000. We're gonna put in our bought price, and then we're gonna put in our sell price. So our bought price is 31.21, right? What is our implied open? 30.60, because we did the little Excel spreadsheet, 31.21. Take away almost 2% off the price is 31.60. So we are thinking that the price of the stock is gonna go to 30.61. That is our guess, right? We're gonna buy an in the money and out of the money at this price. If we're buying a put, in the money would be above $31. So we'll buy $32 puts, limit order, we'll do a market order, put those in, buy for 10. And then we're gonna do an out of the money, which means that it has to get into the money to realize inherent value. I'm guessing. We're just playing around with options here. But, okay, 31, let's buy the 31s. Let's buy 10 contracts, market order. And just because we wanna see the spread, I want us to buy another one. We're gonna buy in the monies, but deeper in the monies, the 15-cent ones. We're gonna buy 10 of those as well at a market order. Okay, so we've got our lineup of HESM options, and we're gonna see how those end up performing. Independent Bank Group, let's buy a put in the money, 45s. We'll buy 10 at 45s, buy 10 at 40s. We're going into the world of really weird stocks here. So we're gonna do our best here. We'll do Valero, okay, company that we at least recognize the name of. And look, they have some options too. For those of you thinking, okay, yeah, for a put, in the money means that the price is currently higher than where the stock is now. So if the strike price is 129 and the price is 128.80, then we are 19 cents in the money because it's 19 cents lower than the stock price. So the thing that's really concerning to me, another thing to mention, is the difference between putting in market orders and limit orders, especially when there's low liquidity on a stock. If you just put in a market order, you could get filled wherever. I remember early on, I was messing around with a penny stock and I just put in a market order to sell my shares because I was up. I was profitable on the trade. As soon as I put the market order in, the price plummeted. And I thought, that's weird that the price went down like immediately after I sold. And I realized there was such low liquidity on that stock and such low trading volume that my selling the stock at a market order actually pushed the price down like 10 cents because the market order sells, you know, at whatever the most convenient bid is. So that was like a huge, I was like, oh wow, you know, I realized after the fact that I had actually caused that selling pressure because there was literally no liquidity. I was the biggest seller in that minute, so I just brought the price down. So in that vein, market orders can be pretty scary. They can be actually very scary. All right, so now we're gonna put our trades into TradeZella so that we can analyze exactly what it is we did. So we'll start with the WBS $45 calls. We're gonna go to just today so that we don't remain distracted. Add trade, manual, option, WBS, create new execution for the 31st. What was the time on this? 12:57 Pacific. Strike price of 45. We bought 10 at a price of 0.7. Is that correct? Okay. Now we'll add in these ATVIs. We have 3 different trades on ATVI. ATVI 93, 92, and 91. ATVI. So on this, we lost 63% or $990 on our 93s. We bought the 93s at $1.57 and we sold them at 58 cents. Pretty atrocious trade. Okay, so looking at our dashboard, we can see that we lost $370 on all of our options. It's funny, when I started the video, when I started recording before I sold the stock, I believe that my total net P&L was up $500, but we continue to sell off in the video, and you know, that's just how it goes. You've also got to mark the timing of when you buy and when you sell. The timing is just as important as the idea. You know, the execution is where you make the money. So look, all of our options, they're down $780 right now. But we've got quite a few options, and we'll check in back tomorrow to see how all the put options do. Okay, anyway, everyone, thank you so much for watching today's video. I hope that you comment, like, subscribe, and hit that notification bell, because I hope that we all gain a better financial understanding and a better understanding of the markets together. Hope that you learned something, and yeah, I'll see you in the next one. All right, take care.